In this video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest videos. That way you have the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. And for Friday, August 2nd, 2024, we have at 8:30 a.m., we have U.S. employment report, as well as U.S. unemployment rate, and then U.S. hourly wages, and then lastly, hourly wages year over year. And then at 10 a.m., we have factory orders. Now, previously, like I stated, the market seemed a little bit too optimistic based off the Fed potentially cutting rates 2 to 3 times this year, when previously, just going back a month earlier, the market was expecting one, if not nothing, and then delayed later on till the end of the year, potentially rate cut, or leading up to early part of next year. Now the narrative has kind of mixed, where there is an expected rate cut in September, even though the Fed didn't specifically say there will be, but they didn't shut it down either at the same time. And then where we might see another additional 1 or 2 after that as well. The only thing is, though, in my opinion, I think the market is a little bit optimistic. And then previously we had some tech stocks, for example, AMD and NVIDIA. AMD report good earnings / went up, and then NVIDIA followed, going up 13%. And then we saw pretty much everything tumbling down today for the most part in terms of tech stocks. For example, previously NVIDIA went up 13%, almost. It was like 12.2% or something like that, or 12.8%. And then now roughly almost down 7% today. Tesla dropping down 7% as well. So some big mega cap stocks dropping, and the market went down overall. We saw pretty much over 2% drop for Nasdaq, and then over 1% drop for S&P, and Dow Jones over 1% drop as well. Now the question is, where is the direction going? For the most part, if you just look at the MACD lines, which indicates if we're in a bearish or bullish movement, it seems like for the early part of the day for the S&P and Nasdaq, it might go up a little bit, but it seems like it's going to still drop. So we're going to look at the S&P first, looking at SPY, which is an ETF for the S&P 500. And even if we were to go up a little bit, slightly up, I'll cover the higher levels. It looks like it actually is potentially trying to come down to this level where it was resistance / support touch points, and that level is at $531 and some change. Might dip down quick enough to hit the 530 and some change and bounce back up within that level a little bit. Mind you, we closed at $543.01. After hours is at $541.71. Now, if it were to go up, then we would have to technically pass this downward trend resistance line, which we already did, but it was a massive breakthrough. But just in case, I don't think it's going to cause resistance personally, but just in case it does, we're pretty much looking at, depending on when we hit it, but about 543 and some change, which coincidentally kind of hits the horizontal, where we saw support and resistance. Yeah, false breakouts here and there, but there are clean touch points along the line. And then the next level we're looking at is pretty much within the zone, because the moving averages kind of collide within this horizontal resistance level. And we're looking at 545 and some change, but then the moving average is at 545.01, and then 546.40, give or take. Again, these moving averages move, but within this zone. So basically looking at 545 and 546 and some change in terms of resistance, right? And you saw multiple times, by the way, too, 547, a little bit within this range right about here, resistance. And then the next level you're moving at is 548 and some change, ultimately getting to 550 and some change, which coincides horizontally with right by here, the resistance. And then there was a support bounce as well, and then it hits the moving average as well. So moving average plus the horizontal resistance, 550 and some change. Will we go higher? Potentially. The only thing is, though, it's kind of strange because we had the tech stocks kind of dipping down after hours quite a bit, and plus S&P and Nasdaq after hours dipping down as well. So and the MACD lines are pointing to the downside too. Now, the thing is, though, it's kind of strange because the problem is there's one issue. The U.S. employment and unemployment rate numbers coming out tomorrow are kind of important because it kind of will show if the Fed is not cutting interest rates, and delayed interest rate cuts they're a little too delayed on their interest rate cuts. If the unemployment rate comes in not as expected. So we have 4.1% previously, expecting 4.1%. And in terms of U.S. employment report, previously it was 206,000, expecting 185,000. So we'll see. We'll see how the market reacts. Now, those numbers come out 8:30 a.m. though. So you'll know by basically 8:35 or even 9 a.m. how the market's going to react, if it's going to be an up day or a down day. Now, just following the MACD lines, though, it kind of shows that the early part of the day, again, it will be driven by the numbers, so almost doesn't matter by the MACD lines. But if you just follow the MACD lines, technically it's showing that the early part of the day, I would say the first trading hour, if not the first 30 minutes, max hour and a half, it'll go up and then get pulled down leading towards the end of the day, pretty much. That's because it's showing more downside. That's the problem. So again, heading down to essentially, yeah, obviously there's going to be levels that are going to cause issues in terms of breakdown, but it looks like it's going to be heading down to 531 some change, potentially. Now, this is for the S&P 500. Now, if we're looking at the Nasdaq, which I'm going to be looking at ETF QQQ, again, basically same thing as the S&P, potentially going up a little bit and then getting pulled down. I could see it kind of getting to this level right about here. So mind you, we closed at $459.66. After hours is $457.49. And then gonna have issues about passing 460 and some change. We saw a little bit of resistance, so on and so forth. And then potentially even getting to this level, about 465 and some change, which would be hitting the horizontal resistance level plus the moving averages, plus this downward trend resistance line right about here. Can it go higher? Obviously can, but again, it depends on those numbers, honestly. And then this moving average, just in case if you want to know what it is and potentially could cause issues, is $473 and some change. Now, ultimately, if it follows the same path as the S&P and does come down, again, early part of the day could potentially go up, again, based off the MAC lines, but then ultimately come down. And if it does, it'll be within the zone over time. Maybe not the first trading day, but potentially Monday, it might just get stopped at this level, give or take. So $448 pretty much on the high end, but then on the low end, not necessarily tomorrow, but basically overall just being stuck within this channel like we saw before. For example, support, yeah, not necessarily resistance, but support, somewhat resistance, support, and then resistance, and all the way through. Maybe this channel could be a little bit lower, but essentially on the high end, it's $448 and some change, and on the low end, it's about $433 and some change. Again, can it go lower, higher? Of course it can. It's just, these are what I'm saying, but we'll see for the most part. But again, indication for S&P and Nasdaq just off the MAC lines is showing downside. The market does not have to follow, especially since data is coming out, and data is what's going to really drive it. But this is what it's being shown right now. And for the Dow Jones is basically it's a little bit mixed potentially. It kind of wants to look like it's going down, but it looks like the upside might be a little bit higher for a little bit longer, but ultimately by the end of the day, it'll dip down. So we have this upward trend resistance line dating back since 2021. I'm just going to show it right about here just quickly, upward trend resistance line. And we have the upward trend support level, but that's not really going to be in play anytime soon. And we're pretty much just hovering within this range. So it might be stuck in this range a little bit longer before actually dipping like the S&P and Nasdaq. But for the most part, within this zone, I would say predominantly you're looking at potentially staying between 40,850 to 39,800 and like mid-low 800 kind of range, because you're hovering around the moving average plus somewhat of a support right about here. But this, let me see, you could go on the high end too, but essentially the reason why I'm going around 40,800 range, give or take, is because we kind of saw stop limits right about here, plus it was a consolidation stop limit when I zoomed in, and right about here too as well. So you could say 40,900 and then essentially probably popping to 41,000 clean. Mind you, we closed at 40,347 points, but not passing 41,000 points in my opinion, just because indications are kind of showing to the downside ultimately. And it's going to be difficult to pass this moving average anyway. Not difficult, but you're going to see some resistance within the range of 40,520 points to 40,447 points, give or take. And then plus we're at the upward trend resistance line limit right now, which is about 40,380 points, give or take. But yeah, so what might could happen is goes up to 40,500 maybe. To be honest, it probably will go higher, 40,770 points, give or take, but within this range. So the let's say 550 to 760, give or take, and then come down towards the end of the trading day, probably close at 40,370. If not, if it ends up following the S&P and Nasdaq fully, then dip down to the almost 40,000 clean or 39,900, 39,800 range, give or take, within that ballpark. But yeah, so that's basically it for today's video. It's kind of unclear, to be honest, because of the data that's coming out for tomorrow, and indications are pointing to the downside. But the problem is, again, if the data comes in favorably, it could flip. So the MACD lines are irrelevant almost in a way. We just have to see for the data. But that's basically it for today's video. Thanks for watching. I appreciate it. If you did find it beneficial, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And if you want to be notified when I upload my next video, consider following, subscribing, so you'll be notified when I upload my next video. Thanks again for watching, and I'll see you guys in the next one. Take care. Peace. God bless.